What is the first step in setting your financial goals? So in The Millionaire Maker, which I'm going to give you a copy straight out of the gate, my version 2 book, we talk about a gap analysis and where you are financially. So in that, we're going to talk about why goals fail without some structure. The second thing is, what do you need before you set any goals? And those are fairly obvious, but we're going to review them. And last, how do millionaires define our targets? Because we hit Freedom Day goals usually in a couple years, and then we redefine again, and we just keep moving and moving our Freedom Day number up. We don't have a retirement number, because most retirement numbers live on a bell curve. You make a lot of money, and then you are budgeted to live on very little as you get older. Why not continue the growth curve? So it's never made sense to me. That's why I do what I do. And in The Millionaire Maker, we're going to start with your truth, like what are the true numbers, not optimism, not fantasy island stuff. And also in The Millionaire Maker, we're going to give you some structures, a gap analysis, some sequencing structures, so you actually do know what you're doing, and you can get really narrowed in to the most accurate, real gap analysis and sequence that you can do as you read the book. So again, make sure you download the book. It's in the show notes, and read up to chapter 3. So some of the core concepts that we're going to talk about is why your baseline absolutely matters, and marking it all the time. The measurement of where you are from your baseline to your Freedom Day, your income to your expenses, is totally more important than just momentum. There's a lot of interesting words that the self-help community gives around money that's not accurate, it's not detailed, and allows you to bring a lot of emotion into a financial logical equation. And your clarity of what you want and what you're capable of, and that includes, are you really hiring enough team and do you have enough systems? There's so much about that that will determine your success. So let's start with why most goals fail. Most goals fail because you're not accurate. So what you need is an accurate baseline. So that means, where are you? And I don't care if you write it down on a yellow piece of paper. Where is all the money that you make? And that includes any cryptos, notes, tokens you own, gold, silver, everything that comes in the form of income. And I want you to delineate what is entrepreneurial side hustles, and what is W-2 that's already been taxed, because they're very different kinds of income. Then you want to detail all your expenses and where you're paying them from. Are you paying them from your personal account? Or you pay them from a business account? Are you still a sole proprietor? Are you actually set up? So be really, really thorough in, what do you make? What do you spend? And then what do you own? And I'm not talking about stuff. I'm not talking about your clothes and vehicles, and unless they're classics and they're actually appreciating. I don't want the depreciating kinds of assets. I want true assets: real estate, airplanes, gas and oil, laundromats, RV parks, storage lockers. What do you actually have, and what do you owe against them? And even if you have a bunch of student loan or bad debt, put it all down. So you got to look at an actual baseline snapshot. Where are you today? Then you look at what's your past, say, 3 to 5 years of performance. Have you been able to increase your income? Have you actually grown in your entrepreneurial ventures? Have you even started an entrepreneurial venture? So what have you actually made? And then what are you projecting in the next year, 2 years, 3 years? And I only go out 3, maybe 5 years. Our promise to make you a millionaire is a 3 to 5 year plan. So our first couple years have to be really thorough and accurate, because it resets your entire foundation. The next thing is, before you start setting your goals, you're going back to those baselines, and you're really going to look thoroughly. What are you spending? What could get moved? And this is what I call forecasting, because a lot of you, if you do have a business or you do have some good alternative assets, you're still paying too many bills out of your personal account. You haven't allocated them into corporate deductions and expenditures that way. You want to make sure you really truly know your cash flow. Some of you operate interesting margins. You make $1 million, you spend $990, and you wonder why you only have 10 left. Some of you have overbuilt real estate portfolios because of the interest rate and the way the insurance industry has been, I'm going to say, attacking the real estate space. It's more and more challenging to cash flow some of that property. So you could be worth millions and have very, very low cash flow. So we need to put our eyes on that and really monitor that. And again, your expenses need to become business deductions. So if you don't know how to live corporate life and don't know how to do this, that's why you want to come. Why do most people come into our community? Is because they want our whole integrated team. They want our tax strategists. They want our bookkeepers that are trained millionaire maker style. They want our estate teams. They want our insurance, our self-directed IRAs, corporate credit, funding. They want our entire team. They want the marketing team. They want to understand sales. How do you understand cash flow? So we have all of these experts integrated for you and your family and what you want, not what we want for you. What do you want? Inside the book, when you read it, the difference between version 1 and version 2 are 40 more families on their way or already hit their millionaire status, and the ways that they can do them are fascinating. So while you're here, I want you to subscribe to my channel, click the notification button, and I would just challenge you to binge my channel for a while. Go up and put up some playlists of the different topics you know that you need to learn to do financial goal setting, to do financial literacy, to understand debits and credits, to understand debt, just to understand a lot. And if you binge 25 hours, we're going to give you a $750 credit towards new tuition that you can use in the future. The last thing I want to talk about setting really good financial goals is it's based on your prior income and what you can do. Now, with our help in mentoring and moving you along, once you make your first $100,000, which will be the hardest money you'll ever make because you don't know how to market, sell, and understand cash flow. But once you go from 100, going to $1 million is just amplifying marketing, sales, and cash flow and your teams and systems. So what you're willing to do and what you're willing to spend, those of you who are absolute staunch solopreneurs where you just want to do everything yourself and understand everything yourself. First of all, you're suffering. You don't need to, and there's no way you could understand what our experts know. So I think you're kind of crazy to do it all by yourself, but really look at what you are doing and how you could do it. So millionaires, we define based on targets. We look at numbers. We look at appropriate percents of growth. We look at percents of investable growth. Some of you just have money rules and say, well, I have to make 20% on everything. Well, good luck with that. Good luck trying to find a consistent asset base that's going to produce that. Some assets are going to produce 6, 7, 8%. Some will produce 10, 12. Some will produce 15. You might get some runaways in the 20s and 30s, but not all of your portfolio will operate like that. If it is, it's interestingly not balanced. So I'll be curious to see what you've done to yourself. So millionaires, we adjust. We always are being mentored and guided by other people that are way more advanced than us, and we have tax strategists. I cannot stress that enough. Our income is led and guided by our tax team, so we keep our total tax burden and total tax strategy as low as possible. So for each of you, just a quick math equation that you are just leaving it be, leaving it up to odds. For every $10,000 a year that you overpay in taxes, for 20 years, you put $1.1 million to the IRS versus put it into your own pocket. So it's time to lean in, set financial goals that matter, that actually can be hit and then elevated and then hit and then elevated. So if you have any questions, go to askloral.com, ASKLORAL, ask a question, make a request. We'll be back tomorrow.